Welcome back to the Digital Asset Report. Bitcoin is trading near $63,000 with Ethereum near $1,800 after crypto gave back part of its weekend bounce. Trading remains fragile, but ETF flows turned positive with nearly $224 million moving back into crypto funds after a 6-day outflow streak. Citi still cut its 12-month Bitcoin target to $82,000 and its Ethereum target to $2240, citing weaker ETF demand, slow regulation, and concerns that treasury companies may become sellers. Meanwhile, President Trump seemed optimistic about America's Bitcoin usage. Take a listen.
But I will say this, to me, cryptos are very powerful. A lot of people are using it, Bitcoin. They're using it at levels that I don't think anybody understands really how powerful. And if we didn't do it, China would do it in a minute.
The biggest news this week is Strategy's large-scale Bitcoin selling. On July 6th, Strategy disclosed that it sold 3,588 Bitcoin for about $216 million, reducing total holdings to 843,775 Bitcoin. The company said proceeds will be used to pay dividends on its preferred equity securities. This was the largest Bitcoin sale in Strategy's history. In December 2022, the company sold 704 Bitcoin for about $11.8 million. Strategy has shifted from pure Bitcoin accumulation to active management of a digital credit securities stack. The company still holds roughly $52 billion of Bitcoin, which keeps it heavily exposed to the largest crypto asset. Recently, the market has become focused on dividend coverage, cash reserves, and whether Bitcoin sales will become part of the funding model. Meanwhile, the mining sector is moving deeper into AI infrastructure. TeraWulf signed a 20-year lease with Anthropic for a data center campus in Hawesville, Kentucky, expected to generate about $19 billion of contracted revenue. The site will support about 401 megawatts of critical IT load, with initial capacity expected in the second half of 2027 and full capacity by early 2028. At the European Central Bank Forum last week, Fed Chair Kevin Warsh stated that the Federal Reserve is determined to bring price stability.
So the market was right to interpret your first news conference as hawkish.
I've just gotten advice from the senior statesman on this group not to do that. But I'll say this, expectations of inflation over the first 4 weeks of this period, they've come down. Inflation risks have come down. Again, in our business, we don't want to overdetermine things. But if there were people in household or the business sector and the financial markets who thought that this central bank was going to be comfortable with an inflation objective above 2%, I guess they'd be disappointed. We're going to deliver price stability in the US. That's what this committee has signed up to do. And our objective is to do that. The tactics, the strategy, and the rest, that's still to come.
OpenUSD led this week's stablecoin news. A consortium including Visa, MasterCard, BlackRock, Google, and more than 140 other companies is backing OpenUSD, a new dollar stablecoin expected to launch this year across Base, Solana, and other networks. OpenUSD is a coordinated payments network backed by companies that already move money, process cards, and manage institutional assets. Circle shares fell sharply after the announcement, a sign that stablecoin competition is moving from crypto-native firms toward large institutions. In other news, Securitize made its New York Stock Exchange debut under ticker SECZ and brought its own common stock onto Solana and Avalanche. The BlackRock-backed company is using its own public listing as a live test of how traditional shares and blockchain settlement can work side by side. Still ahead, Ripple received full MiCA authorization from Luxembourg. That gives the company a compliant path to offer crypto payment services across all 30 countries in the European Economic Area. It also shows how Europe's new rulebook is starting to separate fully licensed operators from firms that cannot keep serving the region. Elsewhere in Europe, Russia's largest bank, Sberbank, is preparing to launch a crypto wallet and digital repository by December, pending new digital asset legislation. The services are expected inside Sberbank Online and Sber Investments, putting custody and wallet access inside a state-aligned banking channel. In other news, Ethereum got a roadmap update. Vitalik Buterin said the network is preparing its biggest rebuild since the merge through the Lean Ethereum roadmap, with quantum resistance, privacy, and cheaper state growth moving up the priority list. And the last thing we'll leave you with, sanctions enforcements are back in focus. On July 1st, OFAC added 134 crypto wallet addresses to the ISIS-K sanctions entry, including 131 Tron addresses and 3 Monero addresses. Chainalysis said the Tron wallets received more than $1.4 million since 2023, and Tether froze balances on all 131 Tron addresses. This puts stablecoin issuers back at the center of law enforcement. This week was a pressure test. Bitcoin treasuries are proving whether their capital stacks work, miners are chasing steadier AI revenue, stablecoins are becoming a fight among giants. Tokenized equities are moving from pilot to public markets. The financial stack is moving on-chain, and every part of it is being tested by funding, regulation, and security. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.